But we'll discuss all that and more with the first guest on the show. We are joined by Rajesh Bhatia, of course, the CIO at ITI Mutual Fund, to talk to us about the fundamentals of the market. Hi, Rajesh. Good to be speaking with you. Thanks so much for making time. First up, let's talk about the market color itself. We're doing very well, 2,700, because a few days ago we were stuck in a range, but we're finally out of that. What do you think should be the realistic expectation, let's say 3 to 6 months from here out, or even for the year, because we're coming off a very heavy base in terms of the returns that we saw last year?
Aren't we fortunate to do so? India has been a stellar market for the last financial year since we bottomed in March 23, and I would characterize this market as a bull market, and which has legs. So the first thing that I would kind of tell your viewers is India is a fantastic opportunity in the globe. The entire world is looking to India as the growth engine, and the last thing you should do is try to time this market. We are in a bull market. The bull market is an animal of its own. Don't try to find the top of a bull market. Let the bull market tell you where it's going to top. It's better to be a little late to sell in a bull market than be too early. So that is how I would characterize the market today. Also, we are in a multi-year investment-led economic cycle. I think our earnings are fine and they're more likely to grow. This is an investment-led market. You can see the characteristics of the sectors that are participating: capital goods, real estate, automobile, banks, etc. And the breadth of the market has been fantastic, right? So many sectors have kind of done well, which is really the color of a bull market. So my message is, this is a bull market, but we are not in a bubble. Stay invested.
Bubble, stay invested. We are still in the bull market, and you've been helping the investors in that bull market, right? 7,000 crore AUM is what you've crossed for yourself. So congratulations on that. But is it getting incrementally more difficult to put money in the small and mid cap space? Is because a couple of your peers, etc., had stopped the SIPs into the small and mid cap space. What's been your experience so far, Rajesh?
So that's the nature of bull markets as well. Yes, certainly there is froth in the mid cap, small cap markets. There has been enthusiasm from the investors, apart from institutional money chasing mid cap and small cap stocks, and therefore there is some valuation exuberance in select pockets in mid caps and small cap sectors. And we've been advising investors that now from here on you gradually invest through an SIP or an SCP route into this mid cap and small cap sectors. Having said that, the India growth story, like I pointed out, is one of the best stories in the world markets today, and the growth of 7+% GDP growth is really happening in the mid cap and small sectors. So we are finding lots of companies which are growing at 20% plus at mid cap and small cap sectors rather than the mega caps. I would say that this is also a multi-year growth story in the mid cap and small cap sectors, and therefore the enthusiasm is the fraud kind of take care of itself in a bull market, but that's really also where the India story is.
Okay, point taken. So that's the view coming in, but let's just break it down sector-wise as you talked about, right? I know you talked about how capital goods, real estate, etc. is in a bull market, but what about metals? Because they're cyclical in nature, right? They're on an uptrend. What's the best way investors should be playing out this theme?
So we are not the best people to comment on global commodities because it's all led by global factors which we can't monitor as closely as some of the others. But here's what I can tell you. A lot of the metal price action is really dependent on China. And I think Janet Yellen was there in China just yesterday and commenting that they are very fearful that China will start exporting deflation to the world, given the industrial products that it wants to export, excess industrial products that it wants to export out of the world. And that includes things like steel. China makes 1 billion tons of steel, which is more than probably 50% of the world's steel production. And if it doesn't address its own demand characteristics in the domestic market, it is likely to export that product and therefore cause deflation in the prices of those metals. So these are not sectors that I feel very personally, at least I don't feel very comfortable chasing, but I would say that that's the color that we can offer you as far as global commodities are concerned.
No, sure, everyone finds it a bit more difficult because there's just so many moving parts with metals that it's just difficult to make the right timing decision there as well. Rajesh, what about real estate? We were talking about this multi-year bull cycle that we are in for the equity markets, and it's been at least, what, 3 years that the bull market, so per se, in the real estate market has also been panning out. How long do you see this is likely to continue?
Real estate is part of the investment kind of cycle that has started in the last 2 or 3 years. A lot of pre-sales of the real estate sector has doubled or more than that for a lot of companies, particularly in the NCR and the Bangalore regions. Usually these cycles kind of last multi-years. The sector is also getting a lot more consolidated. Probably in the first 3 years of the cycle, and the feedback that we are getting on the real estate sector is that there's more coming, which is, it's a multi-year cycle. Inventories are low. It's that now that companies are setting up incremental projects and having clarity as to where they're going to set up. So this is a part of the journey. But the only thing I would caution there is real estate sector is one of the ultimate betas in the market, which is the volatility of the stock prices and their businesses tend to be extremely high. So, play that sector. I think some of the stocks are probably call in the overvalued zone, but know what you're getting into and play it accordingly.
Be cautious when you're entering the real estate sector because the volatility is usually high. Before I let you go, Rajesh, a word on the private banking names, right? ICICI Bank is doing very well for itself today. We saw that big move post HDFC's promotional updates as well. Do you finally see this giant coming out of the slumber, or do you think perhaps it'll take a bit more time before private banking names start firing up?
So I won't comment on any particular bank, but as far as the private sector banking is concerned, there is some kind of news that is there in the banking side. I think the deposit growth has been a little better, and that's incrementally good news for the banking sector, because that was a challenge which was a cause for suspicion that the NIMs will compress far more sharply. I think given there is more benign NIM contraction that is expected as you move forward, I think that's particularly the good news. And the valuations are still at an attractive level as far as private banks is concerned. So I think overall, I would say that there is, because of the incremental good news on the deposits front, I think you're getting some reprieve as far as the private banks are concerned.
Reprieve, but we'll be happy to take that. Thanks so much, Rajesh, for making time and speaking with us. Appreciate your time on the show.